One was the kind of seeing longer term some of the challenges and headwinds facing traditional portfolios and trying to think creatively and constructively on how to address those. And then secondly was just the continued evolution of the product set and capabilities that were becoming available to financial advisors and their clients to access different types of alternatives. And so really it was the confluence of those two things that really brought the topic to the forefront for me. It's not as cut and dry as just saying, oh, I'm going to add alternatives and call it a day. You got to really have a better understanding of what the different types of options are, which ones may or may not be appropriate for you or the types of clients that you work with. And ultimately, starting with the investor's objective in mind and trying to find the best solutions that help achieve that. And also thinking of things from a product structure standpoint. There's a lot of different types of wrappers and fund vehicles that you can use to access alternatives. It could be anything from as simple mutual funds or ETFs on the liquid side to limited partnership, drawdown vehicles on kind of the private side. And then there's a handful of things like interval funds or tender offer funds that sort of sit at a middle ground between, truly liquid and truly illiquid types of investments. So, depending on the type of clients that you work with or the types of assets that you might be trying to access, you got to really spend a lot of time on understanding the nuances across the different fund structure types to make sure that you've got the right container for the right types of contents. I think we saw this in the financial crisis that everybody was looking for, portfolio protection after the 50%, bear market in stocks. I think similarly today, now that we've seen inflation rear its ugly head, you're seeing a lot of activity and interest in things that provide some degree of inflation sensitivity. And so I think ultimately it's about trying to be prepared ahead of time and not try to react after the fact. And ultimately looking for things that offer, what I call kind of the new DIY investing, which is not do it yourself, but rather finding things that offer diversification, inflation sensitivity, and yield generation. Obviously, we know the challenges facing bonds right now in this environment where yields, despite going up, relatively quickly in recent months, are still historically low. We know that inflation can wreak havoc on not only the bond side of the portfolio, but also the stock side. And simultaneously, when we're kind of accustomed to this relationship of bonds doing well when stocks do poorly. So I think that this behavior so far in 2022 has been a little bit of a harsh reminder that bonds don't always play that role of diversifier. So I think there are a lot of different asset classes and strategies out there that can ultimately provide support and areas where these traditional assets might fall short. So I think there's plenty of opportunities out there for advisors to improve and build better portfolios for their clients. The way I see the future for portfolios specifically is a future of greater personalization and customization. This idea of sort of mass customization, which seems a bit oxymoronic when you say it out loud, but ultimately I think technology is really going to help us deliver customized solutions in a scalable way for our clients, and also one towards the openness to illiquidity in a portfolio, where historically many advisors have kind of oriented their practices around daily liquid investments. And that might be still appropriate for the vast majority of most people's assets. But I think the default of having a portfolio that's 100% liquid might not necessarily be the case in the future. I think there could be benefits to owning certain types of less liquid asset classes as ways to improve overall portfolio diversification. And there's more ways for advisors and their clients to do that today. So I think that'll be ultimately a big shift that will continue to see that trend, that direction in years to come.